Hello and welcome back to Proactive New York. Joining me today is David Lesser, CEO at Power REIT. David, always good to see you. How are you this morning?
I'm well, thank you. Always good to see you.
Thanks very much. We're talking about your quarterly highlights out today. Talk us through what some of the financial highlights were for you.
Sure. So we continue to put up impressive growth. Our net income for the 6 months, year-over-year comparison, we're up 147%. REITs tend to focus on core FFO, so our core FFO for the 6 months, year-over-year, grew 102%, grew to 97 cents per share. And for the 3 months, we now hit 51 cents per share of core FFO, which compared to 29 cents per share for the comparable period. So again, very impressive growth. And this is really driven by our acquisitions. Our acquisitions that we're doing are highly accretive. And as I've said previously, we're a relatively small company and we're investing at very unusually high yields, certainly relative to other traditional real estate asset classes. So the combination of those two elements really drives this very, very dramatic growth.
Can you go into a bit more detail on that for us? Just recap some of the acquisitions that you have made this quarter.
Sure. So we completed 4 acquisitions in the quarter. For example, you and I recently did a video providing some updates on the progress we're making in Veneta, Oklahoma. So I'd encourage people to watch that video as well. And you can actually see the property and the real progress we're making there. So that's an exciting one. And our unleveraged FFO yield for that acquisition is over 18%, which is quite dramatic. We also did an acquisition in the quarter in Walsenburg, Colorado. That also has the same 18+% unleveraged yield. So these yields are quite dramatic. And basically, we at the end of the day own the real estate and then have long-term leases to our tenant operator. In both of those cases, the two I just mentioned, our tenant operator is actually affiliated with, and it was capitalized by another small public company called Millennium Investment and Acquisition Company. And we think that that is a strategic alliance that will help both companies. It will allow Power REIT to acquire assets such as these that were in financial distress, and therefore from a real estate play, we feel we were able to acquire on a very attractive basis. And then having sort of an affiliated tenant operator who really has that expertise and can move very quickly in these distressed situations to turn them around, to me is really, really exciting. And we're really seeing that progress in both of those properties.
Yeah, like you said, you've really been on a run with these acquisitions. So capital-wise, how are you doing there?
Sure. So we recently had our shelf registration statement declared effective by the SEC. So that gives us, a more efficient path, if you will, to capital raising. Frankly, given where our stock trades, our common stock, we're continuing to focus on non-dilutive capital. So I don't think near term we're looking to issue common shares because, again, I feel like the market valuation today does not really reflect what we're doing here. So we will potentially use that shelf to add to our preferred stock, which is non-dilutive capital, and we see the potential for a very significant spread in terms of that cost of capital from the preferred stock relative to the investment yield. So that really helps drive growth for our common shareholders. So that's something we're looking to. In addition, we're starting to make some progress potentially on the debt side, whereas historically debt for cannabis-related companies has really been priced at yields that made absolutely no sense to me. We're starting to see that market open up for us. So those two sources of capital really, I think, can help supercharge our growth as sort of a next phase for us. In addition, we completed a rights offering earlier in the year, back in February, and we still have about $17 million to deploy from that capital raise. So we have the ability to continue to deploy, which will drive growth, and then we have access to capital, which should drive growth as well.
Speaking of growth, any pending acquisitions on the horizon you can share with us?
Well, as we've previously announced, we have what for us is a fairly large acquisition, which is a property we announced in Marshall, Michigan. It's an $18.5 million acquisition. We will also add to that some additional improvements, so dollars to fund improvements. But it's a 550,000 square foot property, very large, very impressive facility that we think is somewhat transformational in terms of the Michigan market for cannabis cultivation, as well as, frankly, for us as a company. It really takes us to the next level, so we're quite excited. Transaction has not closed yet. We continue to work through due diligence and work towards closing. Obviously, there's no assurance it will necessarily close, but we're very optimistic.
Well, congrats again on the quarter. Looking forward to chatting again soon, David. Thanks so much.
Thank you.